All right, let's dive in. We're taking a look at Juniper Hotels Limited's Q2 FY25 financials. I know, financial reports. Not exactly the most thrilling thing. But stick with us. We're going to find some really interesting stuff about Juniper's performance.
Yeah, you can find a lot about a company's story by looking at their financials. There's always more to those numbers, especially in a fast-moving industry like hospitality.
Okay, so let's jump in. Juniper's total income grew 32% year over year, hit over a known 222.9 crore. Not bad, Juniper, not bad. But here's the thing. They did this even with like 115 rooms out of service. Renovations at the Grand Hyatt Mumbai.
That's a good point. Shows their core business is doing well, even with some rooms unavailable. Got to be doing something right to grow that much in such a tough market.
Right. Now, let's talk about that big box hotel they bought in Bengaluru. It's almost ready to open, and it's right by the airport, so smart move.
Yeah, that was a big purchase, 325 crore. But average room rates, there are between like 12,000 and 20,000, and they might be able to expand it. Bold move, but could pay off big time.
For sure. Speaking of bold moves, have you seen the grand showroom at the Grand Hyatt Mumbai? It's huge, like 49,000 square feet, all for meetings, conferences, that kind of thing.
Yeah, MICE, they call it.
Yeah.
Juniper is going all in on that market. Now they have like 100,000 square feet of MACE space at that hotel alone, trying to get those big events and the big money that comes with them.
Makes sense. Seems like they want to be the top spot for business and leisure travelers. And speaking of being on top, their average room rate, ARR, grew faster than their rivals, in Mumbai and Delhi, no less.
Yeah, that says a lot about their brand. Not just competing on price, but on quality, the whole experience. Like their Grand Hyatt Mumbai's ARR went up 10%, while the average in Mumbai was only 8%. And their Andaz in Delhi, 16% growth, compared to, what was it, a measly 4% for New Delhi.
Wow, that's a big difference. Taken lead, Juniper. Now let's switch gears a bit. Let's talk about sustainability. Juniper's using solar and wind power at some of their places, and the Andaz Delhi is a zero-discharge building. Pretty cool, huh?
Yeah, that's important these days. Investors are looking at that ESG stuff more and more, and customers care about it too. Juniper's ahead of the game there.
Definitely. But I'm sure some people are wondering about all this spending, right? That Bengaluru hotel, the renovations, all of it must be adding to their debt.
Right, but their debt situation's actually getting better. They've got 247 crore in cash. Plus, they're using those business losses in something called unabsorbed depreciation to offset profits, so they'll pay less in taxes.
Oh, interesting. So it's not as simple as more spending equals more debt. They've got a plan.
Exactly. And speaking of plans, the whole Indian hospitality industry is booming right now.
Yeah, it seems like everyone wants to travel to India.
It is tons of demand, but not enough hotels to meet it.
So perfect time for Juniper to expand, right?
Exactly. And they're planning to, big time. Want to double their key count by FY26-28.
Wow, that's ambitious.
It is, but the World Bank and Moody's are predicting strong growth for India, so they're in a good position.
Seems like they're in the right place at the right time. But any big plan has risks, right? What do you see as the biggest challenge for them?
That's a good question. Well, that Bengaluru acquisition, while promising, it is a bit of a gamble, isn't it? What if the market there doesn't grow as fast as they expect? Or what if they hit some snags with the renovations?
Yeah, good point. It's not a sure thing. It is a brownfield project after all. They
Yeah.
bought an existing hotel that's not being used well, near the airport though, so good location.
Yeah, brownfield can be great, but it's always tricky. Might cost more than they planned, take longer to finish, and will enough people actually stay there? Big question mark.
Right. But then again, Bengaluru is a hot market. Lots of tech companies there, business travelers, conferences.
So true. So it's a calculated risk, for
Okay.
sure. They're not just throwing money around, they're being careful.
So you're saying they're thinking ahead, like planning for the future.
Yeah, exactly. It's like playing chess while everyone else is playing checkers.
I like that analogy. Okay, so we've talked about their growth plans, their money situation, and their approach to risk. But what about their financial smarts? Anything about their balance sheet, their debt, that stood out to you?
Well, one thing that impressed me was how they're handling their debt. They've really improved their position from last year, and their net debt to EBITDA ratio is looking good.
Wait, hold on. For those of us who don't speak fluent finance, what's that ratio all about?
Oh, right. Sorry. It basically shows how easily a company can pay off its debt. EBITDA is earnings before interest, taxes, depreciation, and amortization. It measures how much profit they made from their main operations. So a lower ratio means they're in a better spot to handle their debt.
So lower is better.
Exactly. And Juniper's at 0.9x right now, which is pretty healthy, especially for a growing company. Shows they're making enough cash to manage those debt payments.
That's good to hear, especially since they just spent a bunch on that Bengaluru hotel.
Right, but remember, they had a lot of cash on hand to start with, and they got a good deal on the loan for the acquisition. Shows lenders trust them.
So they're not just borrowing like crazy to grow, they're being strategic.
Exactly. Thinking long term.
Smart. And you mentioned something earlier that I wanted to ask about. Unabsorbed depreciation. What is that? Sounds like some kind of secret financial weapon.
Uh-huh. Not really a weapon, but
Yeah.
it's definitely helpful. Basically, it's because companies can depreciate assets faster for taxes than they do in their regular accounting. So the value of those assets is different in their tax records versus their financial statements. And that difference can be used to reduce their future tax bills.
So like a tax savings account.
Kind of, yeah. And Juniper has a lot of it, over 1,100 crore. Gives them a nice cushion to lower their taxes down the road. Especially important in an industry like this where things can go up and down a lot.
That's really interesting. It's like they've got all these different pieces working together. They're making money, keeping their debt under control, and using these tax strategies to their advantage.
Exactly. They're focused on the big picture and the details, making sure they have what they need to grow, but also stay financially sound.
Sounds like a good recipe for success.
It is. It's all about balance.
Balance. I like that. All right. So as we wrap up this part of our deep dive into Juniper Hotels, what's the one thing you want our listener to remember?
I'd say Juniper's showing they've got the vision, the skill, and the financial smarts. They're not just growing for the sake of growing. They're being strategic and careful.
Yeah.
That's a good sign for their future.
It really is. It's been fascinating to really dig into their numbers like this and see how everything connects.
Absolutely. Reminds us that there's always more to learn. Got to look beneath the surface.
Well said. So until next time, dear listener, keep exploring, keep asking questions, and keep learning.
And remember, sometimes the most interesting things are hidden where you least expect them. Got to dig a little to find them. It's worth looking into, that's for sure. I think it's a mix of things, Their brand, the experiences they offer, the kind of traveler they're going for.
So not just anyone will do.
Exactly. They want people who want something special. Personalized service, and they're willing to pay for it.
Makes sense. And those renovations at the Grand Hyatt Mumbai, that fits in too. That grand showroom sounds pretty fancy.
It is. Almost 50,000 square feet just for events. They've been upgrading the rooms, too. Even the Grand Club Lounge. It's all about that luxury feel, justifying the high prices.
It's not just about having space, it's about the kind of space. And it's working, even in tough markets like Mumbai and Delhi.
For sure. Remember, their ARR grew way faster than the average in both cities. That means they're attracting the right kind of customer, the kind who aren't as worried about the price.
Fascinating. And it's not just about luxury. They're doing the sustainability thing too, which is great to see.
It is. Good for the planet, good for business. Investors are paying attention to that, and so are customers.
A win-win. Okay, but let's talk about the big question. All this growth, all this spending, gotta be putting a strain on their finances, right?
I mean, it's a fair point, but they seem to be managing it well. Their debt's actually going down. They've got cash on hand, and they're using those business losses and that unabsorbed depreciation to save on taxes.
So it's not just spend, spend, spend. They've got a strategy.
Exactly. Thinking about the long game.
And speaking of the long game, the whole Indian hospitality industry is on fire right now.
Oh, absolutely. More and more people want to travel to India, but there aren't enough hotels.
So perfect time for Juniper to expand, like they're planning.
Couldn't be better. They want to double their size by FY26-28. That's a lot.
Ambitious, for sure.
It is. But the World Bank, Moody's, they're all saying India's going to keep growing. Juniper's in the right spot.
Sounds like it. But even with all that good news, there's got to be some risks, right? What worries you?
Well, the economy could always take a downturn. Or something unexpected could happen, like another pandemic. That would hurt travel demand no matter how good their hotels are.
Yeah.
And remember, they are doing a lot of these brownfield projects.
Yeah.
Like that Bengaluru hotel, it's not starting from scratch. They're taking an existing property and trying to improve it, which can be tough.
Yeah, it's not as easy as just building something new.
Right. It can go over budget, take longer than expected, and will it be what customers want? That's the gamble.
Makes you think. But on the other hand, Bengaluru's got a lot going for it. All those tech companies, lots of business travelers, conferences.
Very true. It's a risk, but it's a calculated one.
So they're being smart about it.
Yeah, they're thinking several moves ahead.
Like they're playing chess, not checkers.
I like that.
Okay, so we've talked about their growth strategy, how they're managing their money, and their approach to risk. But what about their financial IQ? What impressed you about their balance sheet, their debt situation?
Well, I was really impressed with how they've been handling their debt. They've really brought it down from last year. And their net debt to EBITDA ratio is looking really good.
Okay, hold on. For those of us who aren't financial whizzes, can you break down that ratio?
Sure, it basically measures how easily a company can pay off its debt. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's a measure of how much profit they make from their core operations. So a lower ratio means they're in a stronger position to handle their debt.
So lower is better.
Exactly. And Juniper's at 0.9x, which is considered pretty healthy, especially for a company that's growing as fast as they are. It shows they're generating enough cash flow to comfortably manage their debt.
That's reassuring, especially after that big purchase in Bengaluru.
Right, but remember, they did have a lot of cash on hand, and they secured some favorable terms for the acquisition financing, which shows that lenders have confidence in them.
So they're not just borrowing recklessly to fuel their growth.
Nope, they're being strategic and responsible about it.
I like that. Now, you mentioned unabsorbed depreciation earlier. What's that all about?
Yes, unabsorbed depreciation. It's basically a result of companies being able to depreciate their assets faster for tax purposes than they do in their regular financial statements. This creates a difference between the asset's value for tax purposes and its value on the books. And that difference can be used to offset future profits, which lowers their tax bill.
So it's like a tax break.
Yeah, you could think of it that way. And Juniper has a lot of unabsorbed depreciation available, over 1,100 crore. That gives them a lot of flexibility to manage their tax liabilities in the future, which is important in a cyclical industry like hospitality.
So they've got this built-in cushion, so to speak.
Exactly.
It's impressive how they're managing all these different aspects of their finances.
They're playing the long game, that's for sure.
And speaking of the long game, what about their expansion plans? Doubling their key count by FY26-28 seems like a pretty aggressive goal.
It is ambitious, but it's not out of reach, especially considering the positive outlook for the Indian hospitality market.
True, both the World Bank and Moody's are projecting strong growth for India.
Exactly. And Juniper is well-positioned to capitalize on that growth.
But of course, there are always risks. What do you see as the biggest challenges they might face?
Well, one thing that comes to mind is the potential for rising interest rates. That could make it more expensive for them to finance their expansion plans.
Good point. And what about competition? The Indian hospitality market is getting more crowded all the time.
That's true. There are a lot of new players entering the market, both domestic and international.
So they can't afford to get complacent.
Definitely not. They need to stay ahead of the curve, keep innovating, and keep delivering exceptional guest experiences.
Sounds like a tall order.
It is, but I think Juniper is up to the challenge.
Well, we've covered a lot of ground in this deep dive, from their impressive financial performance to their ambitious growth strategy, and of course, their clever financial maneuvers.
It's been a fascinating look under the hood, so to speak.
It really has.
No-
So for our listeners who are maybe just tuning in, what's the key takeaway from all of this?
I'd say Juniper Hotels is a company that's firing on all cylinders. They're performing well financially, they're making smart investments for the future, and they're managing their risks effectively.
They seem to be hitting all the right notes.
They are. They're a company to watch, that's for sure.
Absolutely. Well, that brings us to the end of our deep dive into Juniper Hotels Q2 FY25 results. It's been a pleasure exploring this with you.
Likewise.
And to our listeners, thanks for joining us. Until next time, keep learning, keep questioning, and keep exploring.
And remember, the most valuable insights are often hidden beneath the surface. Yeah, they're thinking ahead, for sure.
It's like they have all these different pieces working together, generating cash, managing their debt well, and using these tax strategies to their advantage.
That's right. They're really covering all the bases.
So, as we wrap up our deep dive into Juniper Hotels, what's the main takeaway you want our listeners to walk away with?
Well, I think it's clear that Juniper's got a strong vision. They're executing well, and they're being smart with their finances. Not just chasing growth for the sake of it, but doing it strategically. That's a good sign for their future.
Definitely. It's been really interesting to take this close look at their numbers and see how it all fits together.
It has. It reminds you that there's always more to the story than what you see at first glance.
Exactly. Well, that brings us to the end of our deep dive into Juniper Hotels Q2 FY25 results. It's been a pleasure exploring this with you.
Likewise.
And to our listeners, thanks for joining us. Until next time, keep learning, keep questioning, and keep exploring.
And remember, the most valuable insights are often hidden beneath the surface.